Bitcoin. Bitcoin, again, pulling off yesterday's high, but look at this chart. This is why I use charts in every day. I had a long and verified investing crypto in Bitcoin. You know where we unloaded it? We unloaded it right into this trend line here. Look at how this trend line has caused price to pull back every time. And so again, the thought process here is, well, don't try to reinvent the wheel. Just follow the freaking charts. And that's all I did. So yesterday we unloaded just above 26,000 our Bitcoin position, and it's pulled back since then. Now, again, part of that was also a 3-bar surge. We know that in trading, when you have 3 mega green candles to the upside or 3 mega green candles to the downside, in general, you get a bounce or a pullback. In this case, when it's a sharp move up, you get a pullback to the downside.
Bitcoin is setting up a classic trading move, which could see it hit $100,000, one analyst says. In a tweet on March 14th, Charles Edwards, founder and CEO of investment firm Capriole, called BTC price action in 2023 a bump-and-run reversal. Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing, Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
All right, so right here, this was resistance on Bitcoin. Now, Bitcoin's hanging in there today in spite of a stronger dollar. Now, that's kind of weird. Why is Bitcoin up when the dollar is surging? The answer's so simple, and it's so poetic for why I like Bitcoin long term. Now, you guys know, shorter term, I still think we're going lower. You know, that hasn't changed. 12 to 13,000 first target, maybe 9,000 second target. But on a longer term basis, what we're seeing today, what we're seeing for the last week is exactly why Bitcoin was invented, why it came to fruition. It's because when you have this craziness in the system, when you have scenarios where the government has to come in and backstop deposits, when you have all this stuff because these banks are not doing and following the rules, or essentially they're not managing their own risk, you know what is okay? Bitcoin. And so you're seeing people, I mean, think about this. Think about how investors are selling banks and actually buying Bitcoin. This should be the most freaking exciting thing to any of us that we're seeing out there, to see this occurring, because this shows you that there is an alternative. That for some of us, yeah, I have most of my money in banks, for absolutely. But again, am I looking at Bitcoin as a long-term potential to offset risk in the banks, to offset risks of printing of money? Absolutely. And that is why what you're seeing in this latest crisis is why Bitcoin will survive, in my opinion, and will thrive down the line. Now, granted, it's got to go through growing pains. We know that. Growing pains, yes. Every asset does in the beginning. It's only really 14 years old. Bitcoin is a baby, and basically a teenager at this point. So you have to let it go through growing pains. Okay, so what's going to happen here? For me on Bitcoin, I think you're going to pull back to this line right here. You might get a little bit of a bounce. Then I ultimately think you'll retest down here and eventually break lower. I still think, again, this 18,000 and change level will be meteoric support. I plan to buy some Bitcoin off that level. There's another level here to look at. Take a look at this. If we put a trend line in right here and we put it from this low and just curl it up, look at where that line coordinates, right at the 18,000-ish level, 18.2. So to me, when you have a confluence, when you have two or more trend lines converging, and if price comes in there, that is a huge level of support.
Having passed $26,000 to hit new 9-month highs this week, BTC USD is in the midst of a recovery rarely seen before. Despite cooling under $25,000 at the time of writing, longer time frames are already getting analysts excited after the brutal 2022 bear market. For Edwards, Bitcoin in 2023 has been straight out of the market's textbooks. The largest cryptocurrency is attempting to fulfill a bump-and-run reversal pattern, he believes. The bump-and-run reversal bottom is a bullish reversal pattern that begins with a series of descending peaks. Excessive speculation drives prices down until reaching extreme lows. The price action then reverses direction to the upside and marks the end of the downtrend.
We got to talk about today's day because it is a wild morning session. The S&P futures are getting absolutely annihilated. We're talking down like 85 points on the S&P futures. That is a big drop. Looks like we bounced just a little bit ago, down 78 points. Dow futures are down 626 points. So we're seeing a major renewed sell-off Yesterday, we had a little bit of a reprise. We had a little bit of a bounce that came on the back of a little bit of structure in the U.S. banking system. We saw no U.S. new failures of banks, and that was very important. But in the overnight, Credit Suisse starting to collapse. We saw Credit Suisse getting crushed here today, down about 20. Let me check right now. Credit Suisse down over 20% here, close to 30%, in fact, and that is creating some major panic. So yes, we'll look at some crypto today. We're going to look at some stocks. We're going to look at some commodities like gold and silver. I'm going to cover the gambit in terms of everything you need to know to make sure you're making money. All right, so let's start out with the banking sector. Number one, I got to say this. The first off thing is that this is ridiculous that this is coming as a surprise to regulators, to the Fed, to the government. Like, think about this, guys. You just saw the Fed in basically 1 year raise interest rates from essentially 0 to 5%. All right. How does anyone not think that's going to not break the system? Okay. Again, in addition, and this is something I've said for a long time, I've gone nuts on this. I've said that you essentially have a scenario where the market and investors got addicted like a drug addict to their drug dealer. The Fed was always saving the day. They were always coming in and basically, giving us more drugs in terms of quantitative easing and cheap money. So the fact is, when you go cold turkey, what the heck do you think is going to happen? And I said this a year ago. I said this a year and a half ago. I said the system would break. I said, be ready for black swan events. They're going to come. And here we are today with the banking sector a mess. Europe is now a mess. We're seeing, again, the banks in Europe getting absolutely annihilated today. And again, it's kind of common sense. To me, it's common sense. Now, in all fairness, is it the Fed's fault that we're in this predicament? Partially, yes. And the reason I say partially yes is because, they said transitory, right? We remember that word, transitory. Inflation is going to be transitory. There's no need to really jump on and start raising rates yet because it's going to be transitory inflation. They were wrong. They had to play catch up, which means they had to jack rates up in a short amount of time, insane amounts. And remember, we're not just talking about going from 0.25% to 5%-ish. We're talking about the rate of change, how quickly it happened, and we're talking about how many hundreds of percentage points that was an increase from 0.25 to where we currently are. Now, in all fairness, banks like Silicon Valley, they deserve a lot of blame too. These guys are probably getting paid millions of dollars. In fact, I saw that the CEO of Silicon Valley Bank cashed out like multiple millions, like $3 million just before this collapse in stock options or whatever he was doing. And ultimately, these guys are getting paid this type of money. You better be damn sure you understand the risks when you see the Fed raising rates. So they're not innocent here either. Now, you know who's innocent? The retail investor that's gotten caught off guard in this stuff. Now, if you've been following my chart analysis, if you've been following everything I'm doing, generally you're prepared for this. We knew this was coming. We had lots of shorts in themoneystocks.com's portfolio going into this action. All right, we had crypto shorts just before this latest dip. Then we went long crypto in verified investing crypto just going into this latest bounce. So again, we've been prepared because we're swing traders. Swing traders, it's huge. The difference between a long-term investor and a swing trader is millions of dollars in net profits. It's just that simple. Now, that's when you do it correctly, obviously.
The Circle-issued USDC stablecoin regained its dollar peg, recovering from the Silicon Valley Bank-induced chaos over the weekend that saw its price plummet to 90 cents on major exchanges. Although the decoupling crisis between USDC and USD has been temporarily lifted, investors are unwilling to take systemic risks, so options buyers will seek lower premiums in the far-end options.
PPI data this morning came in better than expected, meaning it was lower. It actually dropped 0.1%. And what that means, folks, is that inflation on the producer price side is coming down. You would have thought that the markets would have rallied a little bit. Didn't really happen that much. But nonetheless, we are starting to rally a little bit off the lows right now. Now, this is Credit Suisse's chart. Look at this. This is your weekly chart. All right, now Credit Suisse is below this key trend line. If we go to the daily chart, look at this. So let me rephrase that. Let me get that back. So look at how Credit Suisse, and this is, by the way, not even including pre-market data. Pre-market data, we're down basically sub $2 down here. But we notice how we broke this long-term trend line to the downside. When you're in a bank stock and you see that type of break, that is not good. Not when you're seeing a break like this at these lows. Because you know what this says to me? It says that there is a risk here of them basically being taken over by the European government. All right, when you have a break like this. Now, if this trend line held, I'd be interested in buying it. But look at over the last couple days how it went below. That is not a good sign. I don't know if they'll get taken over. Maybe they'll get backstopped by the European Central Bank. But either way, it is not a good scenario here. All right, so Credit Suisse, be careful, guys, there. I don't know the outcome here. Just be aware. For instance, I made a small error myself. I got into some SBNY before they basically took that one over. Luckily, it was 1% of my portfolio. That's called risk management. Risk management, where even when you get into risky positions, you're going to only put a small amount in. So if something crazy happens, you just say, okay. And the beauty of it is we've already had multiple winners in the last couple of days, making up for that loss beautifully. We know that the PPI data just came out. The dollar is getting a pop today. Look at this. Now, why is the dollar getting a pop when inflation's coming down? I mean, riddle me this. The answer is very, very simple. The dollar is getting a pop. It's ignoring the PPI data. Instead, you know what it's doing? It's looking at the craziness in Europe. When people get panicked, when they get so fearful, do you know what they do? They buy US dollars and they also buy gold. All right, that's what people run to. So it has nothing to do in a normal scenario. If the banking mess in Europe wasn't going on, if the banking mess in the US wasn't going on, you know what they would do? They would be probably selling the dollar on the PPI data. But because of this, because of the issues here, people are running to the safety of the dollar, and that also is not a good thing for the U.S. markets. Markets don't like a higher dollar.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.